Politics, geopolitics, natural disasters, strikes. There's a lot of things out there that could disrupt this market. So we're going to start to unpack a little bit of that today. My name is Brian Cannon, and welcome to Markets in 5. So I want to point out the fact that I'm not here to fearmonger by any means, but rather just point out some things that we're looking at in consideration of the market. But essentially, much like Hurricane Katrina exposed poverty in the United States, I think we're going to look back and see that Hurricane Helene exposed the fragility of the United States. By the way, we've got clients up in the mountains. It's a very, very bad situation. We're praying for you and in your recovery and your safety. But it is a very, very bad situation. But if we take a look at the aftermath of the storm, they're calling Helene one of the most costliest storms in history to exceed somewhere in the $160 billion range. So there's a very small town called Spruce Pines. And if you're in North Carolina, you might not have even heard of it. It's a very, very small county. But essentially, they are considered to be critical to the global supply of semiconductors. Semiconductors are found in every single device today, right? So from smartwatches to phones, computers, anything electrical, cars, and there's a lot of them. So, but they all get their quartz from the purest mines, which happens to be in Spruce Pines. So Spruce Pines got devastated by the storm. So, that could disrupt the global supply chain of semiconductors, which then could slow everything up. And when you put that on top of the fact that the longshoreman strike has shut down all of the East Coast shipping ports, it's going to continue to exacerbate that problem. And so now we're seeing long lines at Costco and other retailers. And now there's discussions of Amazon going on strike. So all of this is coming at a time when the federal government is trying to they feel like they've kind of battled and won the fight on inflation. I'm not so sure I agree. I think things at the store are still very expensive. But they are beginning to feel that inflation is subsiding. Therefore, they're bringing rates down. Well, if we have scarcity on the shelves and supply chain chinks again, all it's going to do is decrease the supply and it's going to increase the cost, right? So that's going to have a negative impact on inflation. So that's not good. And then when you factor the fact that we've got some geopolitical issues like the conflict, of course, in Ukraine, but then we've got Iran and Israel going at it, and so there's creating some unrest in the Middle East, and so when there's unrest in the Middle East, it impacts oil prices. So when we have a scarcity of products on the shelf, prices are going up, and now gasoline is starting to go up. So these are just some of the many things that we're battling. And look, the market always climbs a wall of worry. The market always has a lot of things to consider and worry about. Right now, it just seems like a lot, but that's always the case. So let's see what impact it's having on the market. All right, so what does the market say about all this stuff? Not really much, right? So you've got, this is the S&P 500, had a kind of a double top, broke through it, came down, tested it. That's a pretty good sign as long as it holds it and heads up. RSI is above 50, so anytime RSI is above 50, generally the market is heading the right direction. When it's below 50 is when the market struggles. So we're north of 50 right now. You've got the MACD, which is positive and moving north. Now there's a potential crossover here, which could be a kind of an early warning sign. We'll be watching very closely, but it's still positive and it's no cause for alarm. Now, when we look at the dollar relative to the S&P 500, usually when the dollar rises, the S&P struggles, and vice versa. When the S&P rises, the dollar either consolidates sideways or goes negative here. So the dollar here in the pink has been heading down, but we've had a nice little breakout here. So we'll see if this thing holds or if it fails and goes on down. But I would assume if the dollar continues to rise, we're going to see the S&P struggle a little bit, and that could be a sign to maybe be a little cautious. Now, when we look at the 40-week average of the S&P 500, it's same thing. Everything looks good. It's heading up. It's above its moving average. You've got a little bit negative divergence here, which is a little bit of a problem. So we're starting to lose a little bit of momentum here, right? So the RSI is starting to have lower highs on the way up as the S&P is making higher highs in the price action. Same goes for the MACD, kind of a little bit of a negative divergence there. So we need to watch that pretty closely. Okay, and finally here, the S&P 500, again, the 5-day moving average relative to the 100-day moving average. That's a little bit more of a shorter term signal, and as of right now, everything looks positive. The 5-day is above the 100-day. Markets are trending higher. So again, can it roll over here? Yeah, it can. But as of right now, this chart looks fine. And wrapping up, as bad as everything might seem in the media, you got to keep focused on the trends and just keep the emotions out of the trades. But if you have any questions, give me a shout. I'll see you on the next Markets in 5.